What's cracking YouTube? This is Terrell with Seven Kingz Trading with episode 4 of our level series. And I haven't mentioned it until this particular episode, and for a reason, I didn't really want to focus on it too much because I wanted you to first kind of see what we're doing and get an idea. But if you notice in the title, it also says sniper entries. And this is one of those things that I really was going to touch on in this video. Also, we were going to explain Fibonacci a little bit. Um, if you ask most traders why Fibonacci actually works, um, they won't be able to really give you an answer other than um, it's the golden ratio or something, very vague like that, right? They're not going to be able to make it make sense as far as like financial markets. Like, why does it actually work? Why do we see price come back um, to the 618 or the 50 in that area and then turn around. And so we were going to touch on that in this video as well, and of course give you some updates on our levels and what's been going on with them. So let's get over to our charts and take a look and see what we got. So we're going to start off with AUD USD. And actually, let's zoom out a little bit. If you recall, these were the levels that we were looking at in episode 3. And we mentioned that we should see a liquidity run because if we yeah, go back to our chart, we have these relatively equal lows right here. We could get rid of that. And this is just highlighting this swing low that we have here. And so there could be a chance that price is kind of seeking out the liquidity under there. But we had our relatively equal lows right here, and we expected there to be a liquidity hunt on it prior to price coming back up. And kind of looks like that's what happened. Um, and then again in the other video, if you recall, I put this drawing tool on the chart. And then I was like, we're not going to get into that right now. That's a little bit more advanced. But I am going to touch on it here because I want you to kind of see what I was looking at when I put it on there. But as you can see, we have some Fibonacci numbers here. Um, the main ones that most people look at are these two right here, your 50% retracement and your 618. Um, we've added a couple others, and this is nothing that we made up personally. Um, the way that I approach stuff, did the same thing when I coach football. Is basically I go out and I do my research, I do my homework, and I basically want to see um, what works. And I try to basically take the stuff that works and put it into my system as one system. Um, Kind of like what Bruce Lee did with his fighting style, right? He took some stuff from boxing, he took some stuff from jiu-jitsu, he took stuff from kung fu, karate, and he put it into his style, but he kind of got rid of the stuff that he felt was unnecessary and just a lot of, fluff. And he just focused on like the core stuff that was effective. And that's basically what I do. And so your 50 and 618, those are important levels. But you also have your 70 and 79 levels, and that's something that I got from ICT as far as like his optimal um, entry, trading entry, or something like that. But basically, so these are my levels, and I'm looking for price to come back into these levels on these moves, right? And then I'll explain here in a second why it actually works. Like, what's the purpose behind it? Instead of just saying, like, yeah, this is, it's Fibonacci and the market just respects Fibonacci. And, like, that's pretty much everybody who uses Fibonacci on YouTube, at least. That's their reasoning behind it is the market is built around Fibonacci. No, it's not. The market is built around buying low and selling high. Like that's what it's built around. So anyway, we'll touch on that. So anyway, as you can see, we did get one of our levels hit here. And when we're talking sniper entry, okay, just another one of these things I want to touch on, right? You go watch other people's videos, right? And they'll have these indicators on there and they'll have these trend lines. Let's go ahead. Let's just go with the trend lines. I'm not going to take the time out to put the um, indicators on here right now, but they'll have these trend lines, right? And you got a couple touches here, a touch here, and then it'll break through right here, right? It'll break through here, and this will be their entry right here, right? Let's go here with it. Let's actually get a little bit more zoomed in. And so, price will come through, it'll break through here, it'll come back and touch right here. And, if they real bad, maybe they got in here. Let's give them the benefit of the doubt and said they got in here, right? Because that's gonna be like the best entry you're gonna see on this type of style of trading, right? The trend line break. You got the trend line got broken, came back, retested, and got in. Now, if they're real bad, like, and I mean bad in a good way, right? If they like some bad motherfuckers out there, then they got in right here. They're just awesome, right? And they probably put the stop loss somewhere below here, something like that, right? And then they're gonna tell you, and then I took it all the way to the top here, right? And if they actually did that, you know, kudos. But that's not what they're doing. They don't know when to get out because like they really don't know how the market moves. This is the majority of them. Like that's why they can't tell you why Fibonacci actually works. Um, but they'll tell you sniper entry. Now, is this a sniper entry? They would argue that because they got in here that it's a sniper entry, right? Um, but is that a sniper entry? Um, Price came down to here and actually moved all the way up, came back, and then touched here before they would have gotten in, right? And that again, I picked the most optimal spot for them to get in with this strategy. And 9 times out of 10, they're not getting in there. They're getting in at the close of this candle right here. But again, just to for the benefit of the doubt, that we got the best trend trader out there, right? Um, is it truly a sniper entry if they got in here and price actually reversed here? Uh, we're looking at about 15 pips from where price reversed up until the entry, right? That's not a sniper entry. Okay. Like what a lot of these people are doing is they take verbiage. They take all these catchphrases and they just throw it into their videos so that they can sell you on stuff. And you probably aren't that informed as far as how to trade. That's why you're on YouTube watching trading videos, right? And so you don't know if it's a sniper entry. You just going off of what they say. What a sniper entry would be is if you were to get in somewhere around here. So let's go back to, let's say, here, and let's go down to a 3-minute chart, and let's see. I see imbalance here, this candle here, and bang. Okay. Now, I would argue that if price, let's kind of go back to the 15-minute chart, and if you can get in this area, because this is around where price reversed, right? That would be a sniper entry, right? Look at that. See, that's a sniper entry. Let's be clear. All these cats out here talking about, yeah, sniper entry, blah, 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 and they're getting in 15, 20 pips after the move already like started. That is not a sniper entry. That is you letting price do something, you confirming that it's doing that, and then you're getting in. You, this is a sniper entry where you basically are getting in where price is reversing. Okay, so that's a sniper entry. And if you look at what we're doing in this series, go back and check out the other videos so far. The videos will show you that we are consistently getting in with sniper entries, real ones. So let's get rid of this stuff and go back to price. And here we have a real sniper entry. Okay. This was the level that we were focused on. These were the three levels we kind of drew out. Um, as you can see, we had the liquidity hunt, and then price came up, sniper entry, and then drop. Now, in the previous video, I kind of drew this Fibonacci on here, and I was like, nah, we're not going to go into that, but I want to touch on it in this video. Real quick, why does Fibonacci work? As I mentioned earlier, when you truly understand what this market is about, it's about what you hear in the movies all the time, right? What you hear people just saying as far as economics go. You buy low, you sell high. If you own a store, you're not going to set your prices in that store based off of, um, you know, what the color of the store is, just something vague, right? You're not going to base your prices on that. Okay. You're not going to say, oh, because I'm on, my store location is off of 32nd Street, I'm going to price everything $32, right? Or 32 cents. Or, you know what I mean? Like, it's not anything vague. You own a store, you're going to go purchase products at a certain price, and you're going to try to find the best price possible, meaning the lowest price you can get them at. And then you're going to change the price, up it so that you can sell it at a higher price. That's how you make a profit, right? And so if we are buying down here, we don't want to sell down here. We don't want to sell below it, obviously, because at that point we took a loss. We want to sell somewhere up here. Now, expecting price to come all the way up is not realistic. It does happen, but it's not realistic. And so, what would you do? You say, okay, if I get price here and I see that it's made a 50% move, if I sell it here, then that should give me a pretty decent, you know, percentage as far as my profit goes. And so, this is why Fibonacci works, because people are buying low and selling high. Okay. And so, when in the other video, what I saw, because I saw this little move right here. Okay. Again, if we were to go back to our Hakanashi charts and go to AUD USD and 5-minute chart. Let's go 15-minute chart. And we see this area, right? Same area we're looking at. And you see this nice little move down. Okay. And so what I did was I threw this Fibonacci on here because I see this move down and it's kind of in the middle. And so I'm thinking, okay, if price comes back to this area, this is a really good possibility that they're going to sell off because they bought here, they're going to sell somewhere up in here. Okay. And if you notice, price came down, came up into this area. Okay. In this case, it's between the 50 and the 618, and then they sold off. Okay. Now, let's go ahead and move this down to here. Okay. Same thing happened. Price came down. Let's go to the lowest point. So price came down and came back up into this area and sold off. Now, if we're looking to get entries in this area, then we would go down. Let's kind of go back to our regular chart now. So once we've gone ahead and we set our Fibonacci's and we see that we have this area that we're working with, all right? Let's just kind of highlight the area. Bring it out here. Take the right extension away. And this is the area that we're looking at, right? Now, what we want to do is see, do we see any interest as far as like supply and demand zones that fall within this area? Okay. Again, we've already touched here with this move down and back up. And so there's a chance that it can, touch here again. But what's above it? Because again, you're looking to run liquidity. And so we see this nice little wick right here. Okay. And then we have this area right here as well. This area right here. All of this can be a supply zone. So let's go back and take a look and see what we have as far as going down to our 3-minute chart. So we go down to our 3-minute chart, and what we can see is we have some imbalance here. We have some imbalance here, but this is kind of like price has already kind of pushed down some. And so this imbalance is kind of right in the middle, and some of it has been taken up, not all of it. But we have this area right, this candle right here that I definitely would say is interesting. This one here. All right. And let's get that extension put back on. Let's go yellow. Let's go green actually. So we have this level here, and then we have this level here as well, as far as imbalance goes. So bang, right there. Now let's go down a little bit further for this area here, or yeah, this area over here, because we want to find that imbalance, right? So let's take this one off, because again, we have imbalance there, but we have some above it. All right, looks like most of it was ran, but not all of it. And this is kind of the original point of the move. So we would go from our high to be safe. Bang. What's our measurements here? Because we don't like to be more than 15 pips. And that's about 7 pips. And so we're good there. And so that would be what we would be looking at. I see price came down here, came back up, came back down, and basically this is where the move started. If we go to a 15-minute chart, as you can see, falls within our area. Let's get rid of price and bang. So once again, we would be looking at sniper entry. Okay. Now again, hindsight stuff. We don't want to focus that much on that. But I'm just trying to show you guys like how to use Fibonacci. Okay. Again, a lot of these cats out here, they use it and it works, but they really don't know what they're doing. They just know that there's something about these numbers that price has a tendency to gravitate towards. And so they use it. They can't tell you why. They can't explain to you why it works. But I'm telling you now, um, basically what it's called is premium and discount levels, right? Premium and discount pricing. So if I put this on here, uh, that's it's a GAN box, but I use Fibonacci for my entries, but this is why I use GAN. Let's bring it down to here. Okay, is to kind of, and let's get rid of the other one real quick. Matter of fact, let's just get rid of that one and then go in and just kind of highlight it. Now, the 50% mark, okay? Everything below that is discount pricing. Everything above it is premium pricing. And so, what you want to do if you're doing smart business is you want to buy stuff at a discount, you want to sell it at a premium. Okay? That's as simple as it gets. This is why Fibonacci works. This is why Fibonacci is powerful. Okay, I'm not gonna talk down about Fibonacci at all. It's very powerful, but once you understand the reasoning behind it, you can see why it's powerful. You're buying at a discount, you're selling at a premium. And that's what you want to do in business. So let me just get that out of there. All right. So let's get rid of this stuff and just go back to um, our level, right? And so we got a touch here, uh, move down. So that would have been a great trade, right? And then let's just kind of put the trade on here. So talking about sniper entries, 3 to 1, basically right there. And yeah, easy trade. And you could have took it for a lot more. Again, you could have targeted this low down here, and that could have got you a lot more. And so 12.83. So you could have taken, what I basically do is once I hit my 3 to 1, I take 75% off. That basically gives me a 2.25 to 1 win to loss ratio, risk to reward ratio. And then I leave that 25% and start targeting levels of liquidity pretty much. And so that 25% could have ran down to here, got us another 12.83, times 0.25%. And yeah, that's basic trading, right? Money management. Take your winnings and then see if you can get some extra, but don't be greedy. Price came down, came back up. Oh, we didn't take this one. My bad. This was the Fibonacci. This was the what you call it? Yeah, because I didn't think we took two on this. We did take two on gold. So, all right. So yeah, if you were using your Fibonacci, that was a trade you could have took. But this was the level we was looking at right here, and easy 3 to 1. Again, sniper entry. I mean, like literally, that's what you call a sniper entry. Okay, when you got to zoom in to really see how it got in there, that's a sniper entry, folks. Okay, when you know how to read the chart, that's what you get out of your trading is true sniper entries, not just somebody saying that it's a sniper entry when it's really not. All right. So I think that's enough for AUD USD. Again, we still have a couple levels up here, pretty strong levels. It's running liquidity, and again, we have that um, swing low down here that it could be looking to go get, and so we may be looking at just more push to the downside. So let's see if we got any levels. We could kind of get rid of this now. And I mean, this is a nice push down. We've already kind of taken advantage of this one. Price came back up into this push, and that's where you saw that push down. So we can see something here. A lot of imbalance up here, and so I would kind of be careful with this one. Um, if if I'm being honest, I probably wouldn't look at this level just because there's a lot of imbalance that price can look to run. Again, if we throw our premium and discount tool on here, you can see that imbalance is right in the area of that. And so I would actually probably go down to a lower time frame and see what I can find here. And look at there, right in the middle, right above this imbalance, we have a nice supply candle. So let's go ahead and highlight that. And we'll get rid of a lot of this price, go down to our 3-minute chart. And looks like we can kind of zoom in a little bit more. What's the measurements here? So about 6 pips. Is it worth being greedy? Let's see. Yeah, so we're getting close to our max again. I never 15 pip stop loss is like maximum, and for me that's really pushing it. And so um yeah, if I was to take this level, I would look to take it here. And I mean, it kind of makes sense as well because again, you still have a lot more imbalance up here. And so when it reacts off this level, it may not have the biggest reaction because there's still some work to be done, potentially as far as going up and getting this other imbalance up here. See all that stuff up there. So yeah, I'd probably go here. So that's where we're gonna go with that one. And this is just kind of giving you an idea of how to use Fibonacci properly. Um, so we have this nice move, and that's if this continues. If this pushes down more, then we have to basically when we start to get the push up, and here we haven't had a break of structure like any character changes right now. High, lower high, lower high, lower high. We haven't really had anything break. So once we have that break of structure, that's when we would go ahead and set our Fibonacci and kind of see where we're at. But for now, I'll just kind of go with that area. And I'll take this. Da, 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 da. And just kind of move it out of the way, but keep it there for reference purposes. Um, And yeah, so if price comes back up to here, we do expect a reaction there. You can get one here, but again, because of it's so much work to do above it, I'm not really going to touch on that. So I wouldn't deal with that level. Not to say that it won't get respected, but I'm not going to look at that as a level that I would look to trade. So as of right now, we're going to assume that this is the low. It's going to push above. If it gives us a different low, then we'll go ahead and adjust that and see where we're at. But that's where we're at there. And so now we go to gold, and on gold we have same type situation with the liquidity. This, we had these equal lows right here, okay, relatively equal lows here. That did get a little bit of a reaction, but not much. But we saw this swing low right here that we expected a liquidity run on. And this is the beauty of like putting these videos out before this stuff happens because it's proof. Like you don't have to be curious if what we're talking about at Seven Kingz Trading actually works because we're putting the videos out before stuff happens. You see it happen, And I mean, if that's not proof, I don't know what is. But anyway, so we expected a liquidity hunt. It did that. Price came up. Again, another sniper entry. Why is it a sniper entry, Terrell? Because we're getting in on the candle that actually started the reversal. Now, in this case, I would have broken even just because of my rules and my money management. We didn't get to our 3 to 1, it got to 2.53. So, for others out there, depending on your money management, maybe that's a win. For us, this is a break even trade, and that's perfectly fine. We don't take any losses. Um, and then price kind of pushed up. Now, in the previous video, I left this area here because again, we had this level here that it could have touched, but there was a wick, I believe, on one of those charts. Maybe it was a 30-minute chart. I don't know. But I do know that once we zoomed in, let's just kind of go back so I could see what got us in there. So yeah. So we had this wick here that just for some reason it when you have wicks, there's usually on lower time frames going to be something hidden in there. Okay, and so when we zoomed in, we saw the imbalance that was hidden inside of that 3 minute wick. And so I said, I actually want to go with this level because this would be the level that I feel is optimal as far as like us getting the best entry. And I left this here just to see if there was a reaction off of it. But this would have been the trade here. So if it would have bounced off of here and moved down, then that would have been a missed opportunity. But once you learn how the market works, once you can speak the language, you these are the type of things that you can do. You can say, okay, this is the obvious level, but I think this is where it's gonna want to go to before it makes that move. So go back to our 15-minute chart. Let's go ahead, get back to, so break even for me. Some would have won that because a lot of people 2 to 1 is awesome, right? And that's 2.53 to 1. But this is where we would have gotten in up here. Again, let's zoom in. Sniper entry. Okay. This is what it really looks like, folks. Okay. Let's just kind of, matter of fact, let's do this. Go to a 3 minute chart. Look at what you're seeing here. That is a sniper entry. Okay. This is a 3 minute chart. Matter of fact, let's go to the 1 minute chart. Price was not in drawdown for any less than seconds, as you can see. That's a sniper entry. Okay. Not waiting for it to break this or go over this line or anything like that. And then just because we're getting in right after it passes this line or after it breaks this trend line or support resistance line or something like that, that doesn't make it a sniper entry. That is a sniper entry right there. The candle that the reversal took place on is the candle that we're entering the trade on. That's a sniper entry. Okay. So now you know why I have that in the titles, if you didn't figure it out already. So sniper entry there. Uh so we got a reaction here, reaction there. Let's go 15-minute. Get out of here. And then price continued to go down. So um on our 15-minute chart, we did get a change of character up here. And then it kept pushing. So if we go to our 7 hour chart, um, kind of a change of character here. It kind of went to the side, and so can't necessarily say that this was a pullback. If you go to a 1 hour chart, it definitely wasn't a pullback. It was just one little move, and so price came up, made a new low. So this is our new high right here. It's so bang. So that's our new high right there. And so yeah, on a 1 hour chart, as you can see, it was just a push down, pull back up, running this low on these liquidity, or running this liquidity right here on this low. And so yeah, if we kind of zoom in, we can see it's probably trying to head somewhere down here. But you know, time will tell. Let's get rid of that. And so we are currently pushing down. Let's zoom out and kind of see what we have. This is a really strong push down. I don't really see a whole lot of areas to, I mean, obviously this one, we could get rid of these now that we have completed those. Uh, this obviously is an area if we can get back up to it. And so, and this might be something here too. Let's go to our Hakanashi and take a look. Yeah, so we got a little sideways moving on the Hakanashi. Nice push down. So I would definitely say that is legitimate as well. So just kind of get out of there. So, all right. So, and we're bearish. And so both of these make sense. So let's go down to our 3-minute chart. Let's actually start here. 3-minute chart. Imbalance candle. That's an easy one. And so we'd be looking for price to be coming back to there. Let's go 30-minute just to get there a little quicker. Okay. 3-minute chart. And imbalance. Probably go with this one here. What are you doing? That one. What's the highest high we have here? Right there. So that would be our entry there for that level. Go back to our 15-minute chart. Get back to present time. And we can get rid of this. Get rid of this. And we've run that liquidity, so we could get rid of that. So here's what I would be looking at. None of it really looks like it falls into the category of a Fibonacci trade. Bang. So like this area might here, we might have a third level. So let's actually have some imbalance in there. Go to our 3-minute chart. And right here. Okay. And then because all of this is kind of sideways and it kind of matches up with this here, we would just measure out that whole little area. What do we have? 22. I still haven't figured out how to read gold. So I honestly don't know what that's in pips as far as that goes. I'm not sure what that is. But roughly we've been dealing with what, like 16 in that area. So that's 17 right there. So I would probably just go here to there. No, I'm gonna go there. All right. And so we'll see how that works out. Uh, Seems a little big as far as the area, and so risk to reward doesn't look like it would necessarily be the best, but we do have this little bit here as well. So that looks a little better to me actually. So I'm going to go here with it and there with it. But we've already kind of came up and touched on most of that. Okay, just because we have a little imbalance above it, and the way it was looking is it could have came up, took us out just to take out that rest of that imbalance. I'd probably go here. Still a little imbalance there. Let's go down to a 1 minute chart. Yeah. So here's what we could do. We could go to the imbalance that's left and then put our stop above there, that high. Oh no. So what do we have here, folks? We have relatively equal highs. And so price coming up and taking that out is a very realistic situation. So we actually have a nice bit of imbalance here in this level here, all still within our premium area. So looks like this is the best place to go. Here to here. Let's go there. Let's see what that looks like on the 3 minute chart. Yeah, that looks a little better. Actually go there with it. So, all right. That would be our level inside of that premium zone. So let's go ahead and go to current price, 15-minute chart. And we'll leave this here just for reference. And so, yeah. So if we don't go any lower, then we're looking at this level. If price pushes up again, we got those relatively equal highs, so we don't want to mess with that level. But we do have some imbalance right up in this area here. And so, and the move started from there. You have a nice little consolidation going. For all of your pattern fans, you have your nice little, I don't know if this is a flag or I don't know what they call it, but they would show you this right here, and then it broke out, blah, blah, blah. Anyway, as you can see, all of that stuff, I mean, it's just it's a way of them kind of trying to explain what's going on without really knowing what's going on. But as you can see, when you understand like how price moves and whatnot, all we have is just a lot of supply and demand and buying low and selling high. ICT, his focus is on algorithms, and I definitely believe in that. Pretty much everything is going to automation nowadays, and when you can put a computer program together that's going to seek out levels of liquidity, it, it, it it's going to be pretty much consistent, right? With monkey wrenches thrown in here and there to kind of throw you off. But yeah, there's an algorithm to it. I definitely believe that. But ultimately, I also believe that the algorithm is based off of basic economics: buy low, sell high. So, um, and that's basically what we're doing. So again, if we go any lower, then we'll go ahead and adjust this and kind of see where we're at. But as for now, it looks like in this area here, we have this wick, and so we can see a nice little move, and as you can see, it's hidden on this 15-minute chart. But when we go down to these lower charts, you can kind of see the levels there. There's some imbalance above it. So, and then you have this here. Yeah, there's a lot of little sneaky stuff going on this gold chart in this area. So we'll see how it works out. But yeah, uh, here's our levels going forward for gold. And we already got this one, didn't we? Let's go 15-minute. Let's get rid of that. That was our trade. So just looking at this one here, I thought no, we didn't find anything there, just right here. And we had this nice push down, so there wasn't a lot to look at. You do have something right here, though. Because this is a nice push down. So I am going to go ahead and go with this level as well. 3-minute chart. Not really a whole lot of imbalance going on in here. Go ahead, get rid of that. The wind is picking up outside, folks. And let's go to a 1 minute. No imbalance anywhere to be seen, folks. There was some right here. It got taken out a little bit right here. But this was the origin of the move here. So we'll just kind of go with that right there. And as far as the trade, I would go here to here. That would be my entry. And so, okay. So this level here, not the strongest level. But as you can see, we got a nice push down, so it is fresh. We haven't came back to touch it yet. We're kind of really zoomed in on that one. Can we make it a little safer? And when I say safer, we're not talking the stop loss, we're talking the entry. Let's go here. All right, here we go. All right, there we go. All righty, so those are the two levels that we're looking at for AUD USD. Get rid of that. And then for gold, we have our three levels there. Alrighty. So, just to recap, we went over why Fibonacci actually works. We did touch on what a sniper entry is, what it isn't, and how to get them. Okay. And yeah, we have our entries, or excuse me, our levels for AUD and gold. And so we'll kind of see where we're at. And yeah, sorry for the long video. And I know at the beginning of the series, I said these videos weren't going to be long. But what I was going to do is I was going to do like a educational series and the level series. But what I decided is it just kind of made sense since I'm showing you these levels, like each video, as we find new levels and kind of go over, the follow up of the previous levels, to just go ahead and throw the education in here. That way, we're kind of killing two birds with one stone. Uh, the other approach, I guess, could lead to me making more videos, Excuse me. But it just seems to make more sense here because we can actually see the levels. I can give you the education on why we're actually choosing these levels, give you the education on why we expect these levels to get hit, and then the follow up to show you what actually happened. And so it just seems to make more sense so that there's not confusion as to what the strategy is. And so, yeah, that seemed to be the best approach. And so, longer videos, not as many videos. So that's kind of the downfall to it. But the the positive is that you're going to be able to make sense of it. And so that's kind of the point. I want you to understand why these things are happening so that you can feel more comfortable as far as what you're learning and actually executing it. So, that being said, if you do find that you're getting value out of it, definitely like, subscribe, leave me some comments with any questions and stuff that you have. I'm seeing some of the views and stuff like that go up. Not really too many questions. I assume this isn't like, I'm pretty confident that a lot of the stuff that we're doing isn't, common information. And so if you have any questions, just throw them out there. I'll be happy to answer. And yeah, here, once we get to around episode 7 or 8, I am going to start asking for you guys to throw some of your charts into the chat so that I can take a look at them for you and kind of, you know, mark them up and show you what you could have did with it. So that being said, like always, you guys, be cool out there with your trading and take care. Peace out.